Hi everyone, I'm the Tax Pro, and today we're going to talk about writing off your vehicle in your business. I'm sure you've heard from different YouTubers on Instagram or TikTok, if you have a vehicle, and it is owned by your LLC, you can write it off and save in taxes. Is that true or not, is what we're going to answer today. And what does that look like? It's not necessarily true, okay? So all the different things that you see on TikTok or on Instagram saying, oh, buy your vehicle in the LLC and then it becomes a tax deduction, that's not gonna hold up in an audit, okay? And I'll explain to you how this works, what this looks like, and how you can write your vehicle off in a business, okay? So let's start with this IRS topic. Topic number 510. This is right on the IRS website, and this is going to show us some information that the IRS has published on the business use of a car. Okay, so when you use a vehicle in a business, the business use of that vehicle is deductible. Okay, now obviously I'm speaking generally, there's always exceptions. But in general, the business use of a vehicle is deductible. The question is, can you fully write it off? Can you partially write it off? And how do you write it off, right? So what does that look like? That's our big question. Now, there's a couple of different ways that you can account for the use of a vehicle. And I'm gonna go over that with you here in a minute. So first off, we need to know, how is the vehicle owned? Who owns the vehicle? Does the business own the vehicle, or do you personally own that vehicle? That's a very important factor that we need to determine here. And how is the business taxed? Okay? What percentage of the vehicle is business use and which is personal? So we need to know all of those factors. Let's start with a sole proprietorship. In a sole proprietorship, so a Schedule C, a Schedule F, and possibly a Schedule E, you are going to have a vehicle that can be either owned by the LLC or the business, or is owned by you personally as the owner. If the company itself owns the vehicle and it is a sole proprietorship, you can still only write off the business use of the vehicle. Okay? It's the same thing if the owner of that sole proprietorship owns the vehicle. So regardless of who owns the vehicle, you're still just writing off business use versus personal use, okay? There's two different ways that we can calculate our vehicle expense here. We can take the standard mileage rate, or we can take actual expenses. Now the standard mileage rate is where you take the business miles and you multiply it by a set amount of cents, okay? So the IRS sets this every year. It's adjusted for inflation. For 2025, you get 70 cents per business mile. Okay, that's the standard mileage rate. You can also take actual expenses, which involves tracking the business miles and the total miles drove, taking the percentage, and then multiplying that by your actual expenses. So you either take standard or actual. Now, you might not be eligible to take standard, and there's some circumstances here that kind of go over that. I'm not going to go over that just because it's for specific circumstances, such as operating 5 or more vehicles at a time and you have a fleet. But in general, for sole proprietorship, you can take standard mileage rate or actual expenses, both of which involve tracking mileage. Your standard mileage rate is designed to include the depreciation of that vehicle. Okay, so you don't get any depreciation expense if the business owns the vehicle versus personal. It makes no difference in a sole proprietorship. Okay, and I've had people say, well, what if I just write the whole thing off? In the event that you're audited, the IRS is going to want to know, do you have another vehicle, such as a personal vehicle, that you utilize for driving around personally? And if you say no, the IRS is going to be extremely suspicious as to how you're using that vehicle all for business and never for personal. Okay, it's not likely, right? Now, if you have a personal vehicle, they might be more likely to buy that. But they can also look at logs of activities in your business, like who did you go to see, when did you go to see them, let's see your appointment calendar, let's look at your oil change records to see what the mileage on your vehicle was, etc. Okay? So in an audit, essentially, it's probably not going to hold up if you try to claim that you have one vehicle and it is only 100% personal or business use, no personal. Probably not going to hold up, okay? So that's a sole proprietorship. Let's talk about a partnership and an S corporation because that's pretty similar, okay? So when it comes to a partnership or an S corporation, those entities are going to be pretty separate from you as an individual. They're considered kind of separate, almost people. They file their own tax return. And so it is going to make a little bit of a difference if the business owns the vehicle versus you personally. Not necessarily in the deduction, but how the deduction is made. When it comes to the business itself owning the vehicle, the business can go ahead and own that vehicle and write off those expenses. Okay, so it can write off that actual expenses and take all of the fuel and maintenance and all that good stuff that goes into that. And then if you drive that business vehicle personally, you are supposed to include that either on your compensation as an S corporation employee, part of your reasonable compensation, or as a distribution in a partnership, okay? It is personal use of a vehicle that is owned by a business. You are supposed to be taxed on that. It is the business providing you some sort of kind of fringe benefit, so to speak, even though you can't be an employee on the partnership side, okay? And you either take a distribution or you include that in your compensation with an S corporation. Now, if you personally own a vehicle and you utilize it in a partnership or an S corporation, there's a couple of different ways that that business can recognize that expense. One way is through an accountable plan. So an accountable plan is an agreement in place within that business that says when an employee incurs an expense, such as utilizing their personal vehicle for business use, the business is going to reimburse them. And this is how the business reimburses them. Okay, so it's a written agreement. And that business then reimburses you as either the shareholder or the partner for the business use of your personal vehicle. And then that business will take that deduction on its tax return. Okay? Now, you can also go ahead and in a partnership, you can take what is called unreimbursed partnership expenses. So if the partnership says, hey, we don't have the money to reimburse you, as long as that is in writing, that you're not going to be reimbursed for that mileage, that vehicle expense, then you can take that on your personal return as unreimbursed partnership expenses. Okay? So you can still take that either on the partnership side or on the personal side as a business expense. The S corporation can also write that off, okay, as a business expense. So in that instance, it might not matter who owns the vehicle because there's still ways for you to write off the business use of your personal vehicle in a partnership and an S corporation, okay? Let's talk about a C corporation because that's a little bit different. A C corporation is going to function more like a normal large business, right? Like Apple or Google, those are C corporations. So when it comes to C corporations, if the business owns the vehicle, it's going to write off the expenses for that vehicle, right? But if you get to use that vehicle for personal use as an employee, we then come to publication 15B, and let's scroll down to employer-provided vehicles right here. And you'll see that if the employer provides you a vehicle, that you're supposed to be taxed on your personal use of the vehicle as a fringe benefit, okay? So you are supposed to be taxed as if that is a fringe benefit. It is a fringe benefit, okay? So if you provide a vehicle to an employee for personal use, you then add that to their compensation, okay? So you're still essentially having to pay tax on the personal use of that business vehicle, is what it boils down to. Now, if you as an employee own a vehicle and it is used in a C corporation, the C corporation can reimburse you for the use of that vehicle and then take the deduction in the C corporation, okay? So to kind of wrap this video up and summarize, it doesn't always matter how a vehicle is owned, okay? So there are ways to write off the business use of your personal vehicle in every type of entity. There are ways to do that. The business itself does not have to own the vehicle in order for the business to write off the business use of your personal vehicle. There are ways to do that in every single type of business that we have in the US, okay? So it's not like the business has to own the vehicle. If the business owns the vehicle, it is not technically allowed to claim as an expense the personal use of the vehicle, okay? It is, unless it's adding it to your compensation as an employee, right? Then it is essentially, you're getting taxed on that, okay? It's a fringe benefit, you get taxed on that. So to go out and purchase a vehicle in an LLC and assume that that's going to allow you to write off the whole entire value of that vehicle and that's going to save you 5-6 figures in taxes, even if you're not using that vehicle for business purposes, that's not going to work, and it's definitely not going to hold up in an audit. The main thing to take away here is if there is a vehicle that is being used in a business, there most likely should be a business deduction associated regardless of who owns that vehicle. Now, you may have eligibility for different types of deductions, like standard versus actual, depending on who owns the vehicle, and it's definitely a conversation you should have with your tax professional if you have questions about it, okay? But at no point in time does you personally owning the vehicle that you're using in a business prevent that business from taking a deduction, okay? So hopefully that was helpful. If you have any questions, let me know. If this was helpful, I would appreciate it if you would like and subscribe, and I will see you guys next time.